So the whole purpose of this channel has been to educate you guys and share the lessons that I've learned in my investing and stock trading career. And with that, I really want to share with you one of my biggest mistakes that I've made and what I've learned from it. And that is when I lost over $100,000 on the Australian Stock Exchange. How's it going, guys? Ryan here, back again. Welcome to the channel for newcomers and everyone returning. And today we're doing something a bit different. Today I'm going to share with you one of the biggest mistakes and biggest lessons I've learned to date on the stock market. And this is to do with one of my long-term investments. If you watch the intro, you'll know exactly what that is about. And that's about how I lost over $100,000 on the stock market from an investment. Now, in this video, I'm not going to name the company because I really don't think that is of any benefit to anyone, but instead I'm going to talk about the concepts that I was, I suppose, thinking about. And really it's going to be a more of an informal video to tell you guys how I really made the decision to finally cut my losses on the stock after such a big loss and how I've dealt with it and the decision that essentially led me to doing so. So without further ado, we go back to effectively 2017 when this all started off. I invested in a company which at the time was an amazing prospect within the Australian Stock Exchange, and it was in the lithium market. And for those of you who are aware, the lithium market in the 2017 period was at its absolute peak. Lithium stocks were going absolutely crackers, and they'd all had really good runs over an extended period of time. As a result of that, there was a lot of hype out of it, and I'd made a bit of money on a lot of other stocks in the same sort of area. So I was feeling pretty confident, pretty good, thought I had my head around the game, but realistically, this was still early days for my investing career. I'd only been into it for a very short period of time. And basically what happened was I found this stock and I'd been watching it for a period of time and it was going absolutely nuts. And what I did was bought in. I used effectively all my money to buy into this one stock. That right there is a mistake in itself because I've effectively put all my eggs in one basket. Not only have I put my capital that I've invested myself at risk, I've also put all the profits that I'd gained to date at risk. And unfortunately for me, I invested in this stock at a time where it was at its peak. And over the next few years, effectively what happened was this stock dropped significantly. In fact, it is only worth less than 1/10 of the value it was at this current point in time of recording than it was when I invested. So effectively, I've lost almost all the money that I'd put into the stock by the time that it hit its low. Now, the real issue that occurred was not the fact that I'd invested in this stock at a very high price. For perspective, I invested around 45 cents per share and it had dropped down to less than 4 cents per share in recent times, unfortunately. And for those of you who know the market, you might know exactly who I'm talking about, but as I said, I'm not going to name the company at all because I think that's pretty disrespectful and I don't want to sledge the company. They're a great company in my opinion still, just things didn't work out the way that they should have with regards to the share price, unfortunately. But the mistake wasn't investing at that point because lithium stocks were all running at that time. The mistake was when the overall market started to reverse, the price started to drop and I thought, wow, that is a fantastic idea to increase the number of shares that I own in this stock. And I just effectively kept buying more. The lower the price dropped, the more shares that I ended up buying. And effectively what I thought I was doing was averaging down, because I thought the overall price for lithium was going to stop going down and reverse and continue an uptrend. What I didn't pay attention to really was the fact that this was an overinflated market. It was effectively in a bubble. So what had happened was all these lithium stocks had risen to extremely high prices. Realistically, when you look at it, these companies, for what they were at the time, were probably overvalued. And that's not something that I really understood at that time, because I was still a relatively new investor. I hadn't learned what I'd learned up to this point in time now, and I didn't look too into detail when it came to what was on the balance sheet, what was the company outlook, all these sorts of things. And with all the hype that was surrounding it, I thought it was inevitable that effectively it would do well at some point in time. It would reverse and it would be happy days, and the share price would effectively keep rising and I'd make a profit. So as I said, I was averaging down and it kept dropping. I bought more at the 40-cent price. I bought more at the 30 cents price. I bought more in the 20s, more in the teens, and even when it was under 10 cents, I continued to buy the share, because I was that convinced that this stock was going to reverse, and I'd invested so much time, so much energy, so much money into this one stock that I lost sight of the bigger picture, and that was that I was effectively investing my money into a share which was not going to reverse, at least in the short term. And as a result, every bit of money I put in there meant I was losing more and more money over a few years. Now, obviously, these things aren't all bad. There are taxation benefits that you can get from having losses on shares, but you don't want to see your portfolio dropping. A tax loss is effectively just something on the side and makes you feel a bit better about it, but at the end of the day, I lost significantly more than I got back. And that is fundamentally what has crushed a portion of my portfolio. Now, recently it dropped under 5 cents a share, and I had to think about it, and I decided, you know what, there are all these other prospects out there. There's companies that I want to put money into. There's companies that I know are going to do really well in the short to medium term. Why don't I just pull the remainder of my funds out of this company and invest it into the stocks that I genuinely think are going to do well in a quicker period of time, and effectively potentially save myself from losing money. I was fortunate in the sense that I still had a decent chunk of money available within that share price, but from the point at which I first bought and averaging down, I lost exactly $106,000 on this stock. And let me tell you guys, that absolutely sucked. And I was feeling pretty stressed, pretty anxious about this stock 24/7 really. And over a few year period, you really just start to, I suppose, obsess about it a bit. And as a result, you focus all your time and attention on something that's effectively, in your mind, you're an investor, you're seeing the price drop. It's failing from that perspective. Operationally, the company was fantastic, and that is what kept me involved. Now, why was the share price itself dropping? And this is what I couldn't get my head around at first. And after doing a lot of thinking, a lot of research, understanding over the next few years why the price was dropping, it was effectively because of two key factors. The first of which was the company kept taking on debt, and they had a significant amount of debt that they had to keep paying off, and they were effectively getting out more loans to pay off more debt. They were also diluting the share price due to the fact that they were raising funds. as a result, the share price just kept dropping and dropping and dropping. The overall market for lithium as well was still dropping, and to this point it still hasn't really stabilized that much at all. It's been dropping, and unfortunately, even though there's incredible demand in the future and the story is absolutely fantastic from a long-term and an operational perspective, their financials were in distress, and unfortunately that is what killed the share price overall. And I should have realized this long ago. I should have cut my losses a lot sooner, and as a result I lost a lot more money than I should have. And as I was saying before, this put massive strain on me, but at the same time I also learnt a very big lesson, and that is why I tell so many people these days, cut your losses quickly. That was the biggest lesson I'd learnt. And fundamentally, what you need to identify if you're investing in a long-term stock is, what is the catalyst that should make you sell? And on a general sort of basis, the catalyst is the story, or the reason you have invested has changed in a bad way. So for instance, when I first invested, they weren't in the financial strife that they were at the time that I eventually got out of the stock. They were in a very different position, and at the time they were only a young sort of explorer before the period, and then when I got out they were in production. But unfortunately, for me, the story changed. I didn't realize that because I'd had effectively fallen in love with the story. I loved the company. Operationally, they were outstanding compared to their peers, but their financials really just did not cut it. And unfortunately for me and a lot of other investors, that meant we lost money on this stock. And as a result, that is the fundamental thing I focus on. Has the story changed? But this has helped me because obviously it's been a massive learning experience for me, in the sense of I now can see the impacts, and I've experienced something that's quite significantly impacted my portfolio. Thankfully, it hasn't crushed it completely, but it impacted it quite severely. But now when I am looking at different stocks to invest in, I know things to look out for that could be seen as red flags. And one of the key things that I've been looking at in recent times is stocks that have good amounts of cash on hand, a low capex to start up with, and no debt. And that's the biggest thing, no debt. Debt for young companies is often something that is good, but if it accumulates over time and there's no way to effectively pay it back, that's when debt becomes an issue. Because with all companies, young or old, there is a need to take out loans or a need to raise capital through, whether that be diluting the share price by issuing shares, or other methods through going to specific cornerstone or institutional investors, for instance. But fundamentally, what I look for now if I'm investing long term is, what are the future and current costs versus the future and current cash flows? What is the current cash on hand pending? What could they effectively do if they had nothing to do for a period of time? Can they survive if nothing progresses? And is there any debt? And the debt is the big thing, as I said before. And for me, that is the first thing I look for now when I'm investing in a company. It doesn't matter how good the operations are of the company, how good the management is. It's the financials that will really sink a company, unfortunately. So that is effectively how I lost 106 grand on the stock market, and it has been an absolute roller coaster of an experience. I wanted to share it with you guys because I don't want other people to repeat the same mistakes that I have unfortunately made, and hopefully they'll be able to see the light in similar situations if they get into them earlier than I did and not lose as much. This has been a yeah, just a massive lesson, an absolutely massive lesson. But when I did sell the share, it was a massive relief, and it was almost like a weight was taken off my shoulders because I didn't have to think about it anymore. I didn't have to continue losing money on the stock, and I could put that money into companies which are growing effectively. And just to put it in perspective, and I've tweeted this, I've shared this story with a few of you on my Twitter page, sorry, and that is within a few weeks of me effectively getting out of the stock that crushed my portfolio and into current stocks that I knew had awesome growth potential. They have effectively everything going for them that I'm looking for. My portfolio had already increased overall by 20% in value. And that's absolutely huge, guys. That is such a big turnaround. And in such a short period of time, I've hung on to this other share for so long, and I'm seeing red constantly in my portfolio. Now I've gotten out of it and I'm seeing green, and a decent amount of it, to be fair, certainly not making up for the entire loss that I've incurred, but it's a step in the right direction. And from a psychological point of view, that has been absolutely fantastic. My mood is so much better, and it's a lot easier to focus on other shares and investments and just my life in general, because I'm not being consumed by this stock, and as a result, everything is effectively going much better from a psychological perspective. If you guys have any sort of questions or queries with regards to this story, or any questions with the lessons that I've learned from this, or mistakes I wouldn't make again, and just the entire journey, the roller coaster of a journey that I experienced throughout the past few years, let me know in the comments section. DM me, hit me up on Twitter, anything, let me know. If you enjoyed the video, please remember to like it and stay subscribed for more content. I just want to keep educating you guys and helping you guys out. And with that, guys, I hope you really enjoyed the video. Have a good day. Catch you next time. Cheers.